If you take a look now at the scariest chart in America, it's the official um, budget office of the U.S., which really shows that they're in a place of no return. The currently mandatory spending plus interest equals about 99% of their budgetary revenues in the U.S.
We're speaking today on Wednesday, June 5th. The Bank of Canada has just cut their rates down to 4.75. What's next for other central banks, including the Fed? And what will happen to commodities as a result of monetary policy changes this year? We're speaking with Peter Grosskopf, who is the chairman of Argo Digital Gold, about this issue. We'll be getting his outlook on gold and commodities and the economy as well. Argo Digital Gold currently has an incentive program whereby if you sign up, you'll get free gold credits. Stay tuned for a message on that. Peter, welcome to the show. Good to see you.
Yeah, nice to talk to you again, David.
So let's start big picture. Like I mentioned in the beginning, the Bank of Canada today announced a rate cut. Now, the Federal Reserve has made no such promises, but we are expecting similar policies from the European Central Bank, the ECB, later as well, and perhaps even the Bank of England. It's priced in. They're going to issue a cut soon. So why are the other peer banks, the other central banks around the world, already ready to make this move, this pivot, and the Fed not yet?
Well, I think if we go back to the beginning of the year, consensus was that the Fed would cut 6 times. And of course, now there's debate as to whether they'll cut at all. Inflation's been running hotter than they would like. And I think given that's still the background in the U.S. with a fairly strong economy, I would not count on Fed cuts this year.
I mean, the CME Fed Watch was pricing at a 50% chance of a cut by September. You think that's too aggressive, Peter?
I think that the big lie out there, if you will, is that inflation can be controlled at 2% at all. I think we all realize that for you and I, paying for regular everyday things, we're probably more in a 5 to 10% inflation bracket. So I think it's going to be difficult, more difficult than expected for the Fed to cut rates. Now, eventually the economy will cool and they'll have an opportunity to do that. I'm not so sure long rates will follow.
Well, let's talk about your views on inflation. That you said that you're not expecting the Fed to cut this year, implying that inflation is going to come down anytime soon. Why is that?
I believe they need inflation in the system now. The debt loads are just too high. And if you take a look now at the scariest chart in America, it's the official budget office of the U.S., which really shows that they're in a place of no return. The currently mandatory spending plus interest equals about 99% of their budgetary revenues in the U.S. U.S. is intent on running large deficits going forward. I think in that kind of an environment, they need inflation to support the growth that's required for them to be able to continue to chip away and repay that debt and pay interest on that debt. So it really comes down to, are you comfortable with the U.S. dollar as your reserve fiat currency? And this is why we're making a case for gold now.
That's an interesting perspective. So what you're saying is perhaps the Federal Reserve could be doing more to fight inflation, but they're not, because in your words, the government needs inflation to erode away this debt.
That's right.
Okay. Well, how do you think this widening deficit that you pointed out, this very scary chart, it's not just you saying this, the Congressional Budget Office is projecting this deficit to widen, this debt load to increase. How is this going to affect, let's just take gold, for example. How is this going to affect the gold market?
Well, I think that when you're debasing currency through inflation, and when you have to debase currency through inflation to support a massive federal debt load, it has investors looking for alternative assets as a store of value, and I think that's where gold comes in. So not only is gold a good portfolio anchor to hedge against the risks in other markets, but it is that last resort currency of choice where if inflation is rampant in the U.S. or in other countries, gold has proven its value over the last 50 years in outperforming fiat currency as a risk-free type of holding.
I want to bring some stats to your attention regarding gold. So global gold ETF saw an 8th consecutive quarter of outflows. This is according to the World Gold Council. But despite a 114-ton drop in ETF holdings. Assets under management in US dollar terms rose to the highest in almost 2 years, thanks to gold's strong price performance. Now, importantly, Peter, if you break down the ETF outflows, it seems to me that most of these outflows are coming from Europe and North America, while Asia is still seeing net inflows. And in fact, if you break this down even further, what we have here is an annual change on change in investment demand of negative 28% on physical gold, bars and coins up 3%. India is up 19%. China is up 68%. So it really looks like North American and European investors are offloading gold, while the Asian investors, China in particular, are doing the exact opposite. Why are we getting this huge divergence in sentiment and interest?
Well, that's a very interesting fact you point out, and I confirm that's my understanding as well. So, Western investors have left the party, and they've left the party because, first of all, their markets have been relatively strong and calm, and secondly, there's been a fascination between the price of gold and the real interest rate in Western markets, and because real interest rates have been going up, investors have generally shed some of their gold holdings. Not the case at all with foreign central banks or in Asia, as you said. So foreign central banks are transitioning towards gold. And I think that's the main reason we've seen this uncoupling from gold and real rates. But also, as you say, customers in China and India are rushing towards gold because their markets are not nearly as strong as ours. They're quite worried about the economic situation, about real estate, and about the stock market.
How much of gold's rally to all-time highs this year can you attribute to perhaps Asian buying?
Well, I think you said it. Chinese buying up 60%. That's huge.
Yeah.
So I would say it leaves us wide open for a swing back to positive additions to gold holdings by Western investors. So if our markets slow down, or if people lose faith that real rates are going to climb anymore, and they're looking for a hedge, Western investors could join this party very quickly.
I want to bring another piece of news to your attention. So India is repatriating its gold. So it's in the process. The Reserve Bank of India this past week has begun the process of shipping back 100 tons of its gold reserves from the UK back to India. It's the first time since 1991 that they've done this. Now, there's speculation that they're doing this for political reasons, although the official statement from the Reserve Bank of India says that this is not the case. They're doing this for purely logistical and strategic reasons, quote unquote. What's your take on what's going on?
Well, it's not the first time we've seen it happen. I think that in general, central banks are more comfortable storing gold on their own soil now than leaving it to another country to store. And that's probably just a reflection of the fact that gold has become a more favored reserve currency. It is the only asset that is nobody else's liability. And frankly, central banks don't want to be told what to do with their gold or face the possibility that it could be expropriated or withheld due to political actor type of reasons. So I think it's just good common sense. And they're not going to admit that it's for political reasons, but that's probably a secondary benefit.
Is there a particular reason as to why it was stored in the UK to begin with?
Just the UK is a global gold trading and vaulting hub. So a lot of countries stored in either the US or the UK over many, many decades, dating back to the early 20th century, I should say.
Do you think this perhaps signals, I guess, a lost or a slight loss in trust from India or the Asian countries with Western banks and Western governments?
I wouldn't say a loss of confidence. I would say it's more just to keep their gold safe on their own soil. They just don't want to have to take that small risk that politics ever get in the way of them accessing gold as a foreign reserve currency.
Well, let's talk about the gold price itself. So it's held steady above $2,300 an ounce. It's having a hard time maintaining its breach above $2,400, which it's surpassed a few times this year. What do you think the gold price is waiting for right now in terms of a move either upwards or downwards?
I think you could put a number of factors out there. So a drop in rates clearly helps gold. I think any kind of market correction would help gold. And I also think geopolitical events help gold in the short term, probably not the long term. I think most likely what will crap gold out of its current range is just market corrections in other areas. Continued feeling that gold is a better, safer, more better balanced hedge against inflation than some of these other major asset classes like bonds.
Well, I think that begs the bigger question as to why one would want to get into gold now. Like you mentioned in the beginning, the economy is still relatively strong, not showing, a major signs of collapse yet. The stock markets have been relatively strong, and gold has already breached new all-time highs and surpassed that by a wide margin, $2,400. Like I've said, it's still near its all-time highs. What is the case, at all, if at all, of getting in now when it's still near all-time highs, when the economy is still, in your words, relatively okay?
Well, when you've got this mountain of debt that can no longer be financed effectively without running very hot inflation prints, I think you're starting to look at gold as being very effective portfolio insurance. And then if you put it up against a 50-year chart in terms of its performance against fiat currencies, you just realize there's far more green there, meaning gold is outperforming fiat currencies in most years and most circumstances. And now you've got this rising level of risk coming from debt that you're going to see more debasement of fiat currency. So I just think gold will be a better performer than most fiat currencies around the world.
I often hear that gold is a good hedge. What, in your opinion, does it exactly hedge against?
I think it hedges mostly significant macro policies, such as deficit spending, global debt levels, debt to GDP, and also underlying that then stock and bond markets.
Do you think the rise in the gold price this year was a signal for, I guess, an expectation for either economic deterioration or more geopolitical uncertainty? Is that what the gold market is sniffing out?
I think it's sniffing out those high debt levels and realizing that, boy, if the government's running this kind of a deficit, this kind of a debt level when things are good, what on earth is going to happen when things are not good? So there's just no room to move. And at this stage, you start to say, hey, look, it's a pretty sound decision. Even if I haven't been a long-term gold bugger believer in gold, it's a pretty sound decision to have gold as 5 to 10% of my household assets.
I think maybe this is where we could lead into talking about Argo Gold, because one of the problems, at least for me, for owning gold is that, either you buy a coin or an ounce that's $2,000 in change right now, or I buy a bar that's significantly more in money. I can't just own part of an ounce of gold unless I buy a gold ETF. That option is available to me. As a retail investor, I could also buy gold shares of mining stocks. That's a leverage play on gold, but that's not a direct exposure, right? So how can I be exposed to just fractionalized pieces of gold?
Well, that's where we come in really at Argo. So ETFs have been an efficient way for investors who have stock market accounts to own pieces of gold in whatever denomination they want. And that's been relatively efficient. By relatively, I mean the average investor would probably pay about 1% a year to own that gold inside an ETF, including all the brokerage fees. What was also available to them was fractional gold. And fractional gold has been offered by a number of dealers online where you can trust them to buy a denomination of gold and to put it in storage for you. Unfortunately, that fractional gold has been quite expensive. And also, I think there's an issue of trust and custody. Where is it actually held? Can I actually access it? What happens if this online goes bankrupt? So I think that what Argo is now doing is taking advantage of what we expect will be changes to the gold vaulting system, which will code each and every gold bar in storage, every good delivery gold bar, with a blockchain code eventually, and that investors will now be able to access direct ownership at a vault for a much more razor thin margin than was previously available. And that's really what we hope to be on the front lines of it, bringing to our customers.
Well, again, you brought up the issue of trust. How is this different from any other, I guess, bullion dealer who has offered fractional gold, who have, again, undergone public scrutiny in the issues of trust? Where is the gold held? Is there actually enough gold in the reserves to service all this fractional gold? What happens if the company goes bankrupt, so on and so forth? Can we audit this? Do we know for sure you have the gold?
Yes, that's a very good question. And I would go even one step further than that. And I would say, why, when you are buying gold to hedge against the financial system, would you buy it through the financial system via an ETF? We propose to set up a system and are setting up a system where your gold will be bankruptcy remote and 100% one for one backed by physical gold. And that's a commitment that the Sprott family and the organizations I've worked for have had for a long time. It's bankruptcy remote, held in good custody by a recognized and registered vault in your name. So if we disappear, you can pick up your gold. And that's our commitment in terms of the way we're structuring this offering to our clients.
Would you consider loaning some of the gold out to third parties?
We would not. We will eventually have value-added features for our customers where they can decide to loan it out, but that will not be our decision.
Well, I think the viewers watching this would like to know how we can guarantee there is a one-to-one reserve backing. Anywhere we can go for that information, or anywhere you can, how transparent are you, basically, is my question.
On our website, you will have full access to your holdings, and there'll be a fine print section where you can see exactly how your gold is held in trust for you.
Okay.
By the storage organization that we've chosen.
Can we redeem the gold at any time for physical?
You can. You can go and pick up your gold at the vault itself, and you will be able to do that wherever we are vaulting. We intend to set up a global network of vaults, and you will also be able to eventually purchase for a very low price a co-location token, and you can switch your gold from one vault to another if you're moving or for reasons of portability.
If there's really high demand for, let's say, this particular fractional gold product, could we expect it to trade at a premium to NAV?
I wouldn't count on that. I would just count on having access to your gold. I would count on it being in safe storage and custody. What we can tell you is the reverse of that, is that you will pay a very fair price, a very fair trading spread, and a very fair vaulting charge, an insurance charge for that gold. So that we will deliver, and that is our pledge, to do that cheaper than you could get it elsewhere. And it's been a real problem for those buying physical gold in the past.
So when we say fractional gold, what kind of denominations are we talking about?
Any denomination you choose. So there won't be a limit. You can buy a gold holding through us as low as $5, I believe.
Beyond gold, I believe you're also integrating cryptos or blockchain technology with this fractional gold. Can you explain how this works?
Yeah, so that's very important. So eventually we do expect gold to be fully tokenized. It's going to take a little while yet. First step, we'll be getting it on the blockchain, and there is a digital ledger that's being established by the World Gold Council. So all gold will be on that same ledger. Following that, some large crypto or a banking type of institution is likely to come out with tokens. HSBC has already had one token they've started to trade. And we want to be at the forefront of this integration. So we want to be able to offer customers gold tokens and gold backed by the blockchain. And we also want to offer on and off ramps from crypto. So if you have a holding in cryptocurrency in Bitcoin or Ether, we want you to be able to exchange it at our dealer for gold. And we want you to be able to go the other way around too. As you know, Bitcoin and Ether are a bit more volatile than gold.
Yeah,
they do share the same philosophy which is get out of fiat currency and into something that has a chance to perform.
Well, I think what you're doing is congruent with the larger trend of tokenizing real assets, real world assets. That is BlackRock, for example, leading the charge. They have a plan to tokenize $10 trillion worth of its assets in partnership with several different firms. What is the benefit, if any, of tokenizing assets?
Well, I think in the gold context, the benefit of tokenization would be instantaneous settlement. B, certain blockchain encoding of your ownership of that gold bar. 3, to be able to move it from one vault to another by having a debit and credit system between vaults, so it makes gold much more portable. And eventually it will lead to enhanced features like being able to lend your gold, like being able to spend your gold over a credit card system and access it much more easily than you currently could. So you're basically taking this entire gold world where the spreads are anywhere between currently 2 to 10%, which is incredibly inefficient for customers. And you're making it much more efficient.
If I were to sell my ownership of digital gold to somebody else, basically a peer-to-peer transaction, would that be possible?
It will be possible in the future. You've got to be properly licensed to do that. So much like cryptos, there need to be money center bank licenses that are paid attention to, AML and KYC requirements by those handling those transfers. But I do expect that when gold tokens are fully operational, you will be able to send it as a money remittance,
because one of the arguments for holding, let's say, Bitcoin as a store of wealth, according to some of the Bitcoiners, is that it's portable, right? You can take your hard drive or memorize your seed phrase anywhere you go in the world. You can have access to that digital wealth anywhere you go in the world. The same argument could not, I guess up until now, be made for gold. You can't just carry your gold bars anywhere through airport security, right? How do we fix that problem?
Well, I think even with what we are coming out with as the first phase, as a fractional representation of gold and storage, it's essentially a warehouse receipt. You will be able to move that receipt from vault to vault. When gold tokens come, there'll be a closed loop system. You'll be able to enter and exit that system based on wherever you are in a similar way to crypto.
Can you just one more time for us reiterate the benefits, pros and cons of owning this versus an ETF, a gold ETF? There are many ETF products out there already.
Yeah, so we anticipate it'll be a lower trading charge. It'll be a lower storage charge. You'll be holding your gold outside of the financial system in proper custody with proper one-for-one physical backing. You'll be able to pick your gold up if you're an investor of a certain magnitude. So you're gaining direct access to your gold as opposed to having it held in an ETF.
If I sell my gold ETF, I can get instant settlement in cash, right? I can basically sell that in
2-day
cash.
Yes.
Right.
2-day settlement.
How long would it take in this case for Argo?
Well, we're anticipating same-day settlement.
Beyond the portability aspect, the store of value aspect, we're talking about the future of digital gold being a relatively new thing in the industry. How do you think investors would likely respond to the notion of owning gold in a digital ledger versus physical? I mean, if you have hardcore or diehard physical bullion investors who really just want physical, how would you convince them that this product is still in line with what they want?
Well, if you're owning physical and you're holding it either in your house where insurance is a problem, or in a storage deposit box, or even if you have a direct holding at a vault, that's a very expensive proposition on an annual basis. So we're going to be able to undercut those markets very quickly. If you're holding gold as an ETF, as I mentioned, we think we're going to be able to convince ETF investors to move over because they'll have direct ownership in the gold. They'll be able to trade it 24/7 at a fairly low spread. I think the most important thing in terms of making it more accessible is this will be available for any household, any mobile customer, any new economy style investor that wants to just open an account and trade something on their phone. So we do think it's going to attract a different type of customer, a more modern type of customer than gold historically did. And that's kind of the altruistic part of what we're doing, is to open gold up to a new market here.
And what's the next step in the timeline for Argo Gold?
Well, we're about to start taking interest for opening accounts, and then within the next 2 months, getting those accounts operational and buying gold. So we're actually in an operational rollout phase now, where we're starting to take customer names down and we're starting to open accounts and get the platform operational.
Do you, as of recording today, do you already have some gold in storage in vaults?
We have the test accounts are being set up. We're getting our customer agreements in place and all our service providers ready to handle the flows.
Okay. And are you limiting customers to only certain jurisdictions? I mean, who qualifies?
Not at this stage. We're setting up our first few operational agreements in North America, but we should be able to take investors from around the world.
Very good. All right. Well, like I mentioned at the beginning, I think you're offering for new signups incentives on free gold credits. So if you're one of the first to sign up, in the link down below, you'll benefit from these incentives. Thank you very much, Peter, for your time today.
Okay.
Best of luck with the launch.
Thank you for your time.
Yeah, we'll speak again soon. And thank you.
Look forward to reporting over time.
Absolutely. More news to come. And thank you for following. Thank you for watching. And don't forget to click on the link down below to learn more about Argo Gold.